Hey everyone, welcome back to Corporate Decoder, the place where we break down the financial mumbo jumbo so you don't have to. This time we're diving into Neogen Corporation's 2025 proxy statement, and let me tell you, it's got some interesting tie bits, especially after a rough financial year. Before we jump in, if you dig these deep dives into company filings, make sure you hit subscribe. And hey, we've got a growing Discord community where we break down more of this stuff, so join us there, link in the description. Neogen is a company that works in food safety and animal health. Think diagnostic tests for food contamination and products to keep animals healthy. They've had a bit of a rough ride recently, and this report talks about their annual shareholder meeting and what investors need to know. We're going to look at how their executive pay lines up with how the company actually performed, which is always a juicy topic. This document is a proxy statement, basically a report from the company to its shareholders explaining what will happen at the annual meeting and asking for their votes. The big news from last year is that the say on pay vote, where shareholders get to give their opinion on executive compensation, didn't get enough support. Only about 48.8% of the votes were in favour. That's a pretty clear signal that shareholders were not happy with how executives were being paid compared to the company's performance. And what did the company do in response to this shareholder feedback? Well, they heard loud and clear that investors wanted to see a stronger link between pay and performance, especially when it came to long-term incentives. They felt that the equity awards, like stock options and restricted stock units, didn't have enough performance conditions tied to them. So in response, Neogen is introducing something called performance share units, or PSUs. These are basically rewards that only pay out if the company hits certain financial targets over a period of 3 years. This is a big shift because before, a large chunk of pay was more tied to just staying with the company for a certain amount of time, not necessarily hitting specific performance goals. For fiscal year 2026, half of the long-term pay for executives will be in these PSUs, designed to measure performance against revenue, profit margins, and cash flow over 3 years. They're even tying it to how Neogen performs compared to other companies in its industry. This is a classic move to try and get executives focused on the long haul. Let's talk about the top brass. Johnny Adent was the president and CEO until August 2025. Even though he stepped down, his compensation for fiscal year 2025 is still detailed here. Looking at the pay for the top executives, we see figures that might seem pretty high. For fiscal year 2025, Mr. Adent's total compensation was over $680 million. The Chief Financial Officer and Chief Operating Officer, David Naimura, had a total compensation of over $2.6 million. Amy Rockland, the Chief Legal Officer, earned over $1.7 million. Now, this is where it gets really interesting. The company has to show how the compensation they actually paid out aligns with performance. And boy, there are some big differences here, especially for the CEO. Scroll value of initial fixed $100 Scroll Clace investment based on equity Scroll. The report shows a compensation actually paid, or CAP. This is the real money earned by the executives after accounting for certain adjustments related to the timing and value of equity awards. For fiscal year 2025, Mr. Adent's CAP was actually negative $45 and Adent's CAP was actually negative $45. For fiscal year 2025, Mr. Adent's CAP was actually negative $4, which can be very different, especially if the company isn't performing well. Scroll, a beverage ST, total for non-PO, Neos et al. EEC to do the keb x e-juice. The average compensation reported was about 2 executives. The average compensation reported was about $2.2 million, while the average compensation actually paid was a much smaller $90 through 5. This huge gap between reported and paid compensation for the other executives is stark. It suggests a lot of their compensation is in the form of stock awards and options, whose value is calculated at grant but can fluctuate wildly, and these cap numbers adjust for that. Now, how does this compare to Neogen's performance? Well, their total shareholder return, or TSR, which is basically how much money shareholders made from the stock price and dividends, has been pretty weak. This graph shows that Neogen's TSR has actually underperformed the S&P Midcap 400 Healthcare Index. That means if you invested $100 in Neogen 5 years ago, you would have made less than if you had invested in that broader healthcare index. For fiscal year 2025, Neogen's TSR was a mere 16.5%, while the index was at 10.8%. That's a significant underperformance, meaning shareholders have not been rewarded well by the market. Scroll CAP versus adjusted EBITDA, company selected measure. Scroll, the company also tracks adjusted EBITDA, a measure of profitability. In fiscal year 2025, their adjusted EBITDA was 180 TDs. They were tiny compared to the reported total compensation. This discrepancy is a direct result of the fact that the annual incentive, often tied to metrics like adjusted EBITDA, didn't hit the targets, and often tied to metrics like adjusted EBITDA, didn't hit the targets. Scroll adjusted EBITDA ku company kappa selected measure. Dr. Dapsab in millions ektefiasab. Scroll kefale fiscal year 2025. The company's revenue landed at $80.95 million, which was below their target of $960 million. Their adjusted EBITDA was $18.4 million, also below the target of $235 million. With these numbers, it's no surprise that the annual incentive bonuses for the executives were zero. They didn't hit the lowest performance targets, so they got no cash bonus. Even the directors weren't exactly left out in the cold. Non-employee directors received cash retainers and significant equity awards. For instance, James C. Borrell, the board chair, received over $292,000 in total compensation, including cash and stock awards. Ashima Gupta and Rafael Rodriguez both received $35,000. Again, in a mix of cash and equity. So, what's my take on all this? At first glance, the reported executive compensation can seem astronomically high, but when you dig into the compensation actually paid numbers, it paints a different picture. A lot of that reported pay is in stock and options, and when the company underperforms, as Neogen clearly did in fiscal year 2025 with negative growth in key areas and lagging shareholder returns, the actual value realized by executives shrinks dramatically. The introduction of PSUs for 2026 is a positive step, finally aligning executive incentives more directly with company performance metrics that investors care about. However, the company's actual financial performance needs serious attention. Missing targets across the board for revenue, EBITDA, and especially negative free cash flow is a red flag. While they are making changes to compensation, the underlying business issues need to be addressed for them to regain investor confidence. Their TSR is lagging behind the industry, which is a concern for anyone holding the stock. Neogen is in a competitive market, and while they have solid products, the integration of acquisitions and navigating economic downturns have clearly been challenges. The leadership changes with a new CEO coming in signals a potential shift in strategy which could be good or bad depending on execution. Looking ahead, the success of these new PSUs and the new CEO's ability to turn the business around will be key. If they can improve profitability and shareholder returns, the optics of executive pay will also look much better. For now, it's a mixed bag with some worrying financial trends, but a promising adjustment to their compensation philosophy. Alright, that's our breakdown of Neogen's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.